All right, let's dive in. Today we're taking a deep dive into the financial world of Ador Welding Ltd.
AWL.
Yeah, AWL for sure. They're a pretty big deal in the welding industry in India, right?
Yeah, definitely a major player.
And, well, you've given us quite a bit of material to work with.
Oh, yeah.
Yeah. They're unaudited financial results for the quarter ending December 31st, 2024.
Interesting.
Plus, the auditor's reports, both standalone and consolidated statements, so
Sounds like we've got our work cut out for us.
it's going to be fun. There's a lot to uncover here.
What kind of things are we looking at?
Well, there's a merger involved, some inventory issues, and even a legal battle they're dealing with.
Oh, wow. A legal battle.
Yeah, so it should be a pretty interesting deep dive.
It definitely sounds like it. It always amazes me how a company's financials can tell such a complex story.
It's true. Like, you see the numbers, but there's so much more behind them, right?
Right, exactly. It's not just about the day-to-day operations.
Yeah.
AWL is dealing with some pretty major events that are definitely going to impact their bottom line.
For sure. So let's start with that big picture, their overall performance this quarter.
Okay, sounds good.
AWL reported a standalone net profit of 1,681 lakhs,
Right.
which, if we're comparing to the same period last year, it's a bit lower.
Yeah, it is.
And then their consolidated net profit, which includes all their subsidiaries, that comes to 1,541 lakhs.
So taking a bit of a dip.
Yeah, a bit. But here's where things start to get a little interesting.
Oh.
The reports mention restatements because of their recent merger with Andor Fontech Limited.
ADFL.
Yep, ADFL. Have you had a chance to look into that?
Yeah, a little bit.
So these restatements, they're basically adjusting the numbers, right?
Exactly. It's like they're pretending AWL and ADFL were always one company.
Oh, okay. So it's kind of like creating a blended family photo.
Uh-huh. Yeah, something like that. It's a way to get a more accurate comparison, like how they would perform together from the beginning.
So it gives us a clearer picture, like their actual growth over time.
Exactly. You need that context to really understand their trajectory.
Right, right. Okay, so we've got the merger in mind, but now let's dive into the details, those exceptional items.
Ah, that's where things usually get interesting. What's
Wow.
going on there?
Well, it's the section that highlights those unusual events, things that don't usually happen in, day-to-day business.
You're right, those one-offs.
And for AWL, there are 4 key things that are impacting their profit.
4 key things.
All right.
Lay it on me.
First up, merger expenses. AWL spent 568 lakhs on legal and professional fees just for this ADFL merger.
Well, mergers can be complex beasts.
I guess you could say love doesn't come cheap.
Haha. Yeah, not in the corporate world. You've got all the legal and financial due diligence. It adds up.
Yeah, that makes sense. All right, next we have employee benefits.
Okay, employee benefits.
Specifically, 379 lakhs paid out, most likely to ADFL employees.
That's not uncommon during mergers. Could be bonuses to smooth the transition.
Oh, so like a little welcome to the family gift.
Exactly. It's all about retaining key talent, making sure the integration goes well. After all, people are a company's biggest asset, right?
True, true. All right, next up, things take a little bit of a turn.
Oh.
We've got obsolete inventory. AWL had to set aside 100 lakhs to account for this. Can you explain what provisioning means in this context?
So provisioning, it basically means they're setting aside money to cover a potential loss.
Okay.
Like in this case, they're anticipating that some of their inventory might be outdated.
Outdated.
Yeah, or maybe unusable, so they won't be able to sell it at its original value.
Oh, I see. So like admitting they might have some stuff just sitting in a warehouse gathering dust.
Pretty much.
So is this a red flag? Like, does it say anything about how they manage their inventory?
It definitely raises some questions. Could be challenges with forecasting demand, or maybe even a shift in market trends.
Something to keep an eye on then.
Definitely something to watch.
All right, now for a little bit of good news.
Okay, good news. I like that.
AWL actually made a profit of 46 lakhs from selling a property in Kochi.
Ah, so a little win amidst the adjustment.
And every little bit helps, right?
It does, it does. But it's important to see the context, is this a one-time thing or part of a bigger plan?
Okay, good point. So we've got a merger, some employee perks, outdated inventory, and a property sale.
Quite a mix.
Yeah, quite a mix. But let's zoom in a bit. How are their different business segments performing?
Now we're talking. That's where we can really see their strengths and weaknesses.
Exactly. So they operate in 3 main areas, right?
Right.
Product, services, and then there's this M&R division.
The M&R division, is that new?
Yeah, it looks like it came from the ADFL merger.
Ah, that makes sense.
So right off the bat, the product segment looks like the star.
Yeah. How so?
They brought in most of the revenue, 23,388 lakhs in Q3 2024.
Wow, that's impressive. They must have a pretty diverse product portfolio.
Yeah, I think they cater to like all sorts of welding needs across different industries.
Makes sense. It seems they've positioned themselves well to capture a good chunk of the market.
But then their services segment, that's a different story.
Oh, what's happening there?
They're showing a loss. 290 lakhs this quarter.
That's significant, especially when their products are doing so well. What could be the factors at play?
It's a bit of a mystery, right?
It is. Could be increased competition, maybe their input costs have gone up, or even, a shift in what customers are looking for.
Yeah, lots of possibilities.
We'll need to dig deeper to really understand what's going on there.
Agreed. Now let's talk about this new M&R division.
All right, the newcomer. How are they doing?
Not bad at all. They pulled in order 129 lakhs in profit for Q3.
Not bad for a fresh start.
Hmm.
What does M&R stand for, by the way?
I'm thinking maintenance and repair.
Yeah, that sounds about right. Focusing on keeping those welding machines running smoothly.
Yeah, basically a subscription model for upkeep, right?
Smart move. Builds a steady revenue stream.
Totally. But even with all these different segments doing their thing, there's a big issue we need to talk about.
Oh, right.
The legal battle with the Bureau of Indian Standards, the BIS.
Ah, yes, the legal saga. Fill me in.
So they've been ordered to pay a pretty hefty amount.
How hefty are we talking?
3,643 lakhs. It's a compounding amount for an alleged offense.
Wow, that's serious. And what's AWL's stance on this?
They're saying it's unfair, obviously. They've filed a writ petition and actually got a stay order for now.
So it's a waiting game. But that uncertainty can't be good for them.
Yeah, it's definitely a risk factor. Well, we've covered a lot, from mergers to legal battles, but there's another key element to look at. AWL's balance sheet. What do you think?
Absolutely. The balance sheet is the foundation, and it gives us a snapshot of their overall financial health.
Exactly. So let's break it down. What do their assets and liabilities look like?
Okay, let's see. Looking at their standalone figures, their total assets are 67,351 lakhs, and their liabilities are 17,988 lakhs.
So for those who might not be familiar with all the financial jargon, could you break down what assets and liabilities actually mean?
Sure. Think of it like this. Assets are what the company owns. Cash, inventory, equipment, buildings, all of that.
Okay.
Liabilities are what they owe to others, like loans, unpaid bills, things like that.
Okay, that makes sense. So ideally, you want more assets than liabilities, right?
Generally, yes. A strong asset base gives a company more flexibility, makes them more stable, but, it depends on the industry and the company's specific situation.
Right, it's not a one-size-fits-all thing.
Okay.
What about this term capital employed? We hear that a lot.
Yeah, capital employed, that's basically the total investment in the business, the money they use to generate revenue. For AWL standalone, it's 49,363 lakhs.
So it's not just about having a lot of assets, it's about using them well, right?
Exactly. You want to make sure that investment is working hard for them.
Makes sense. But we also need to consider those consolidated figures, right?
Or absolutely. Bring in the subsidiary. Their consolidated assets are 67,462 lakhs, and liabilities are 18,570 lakhs.
So those are the numbers including 3D Future Technologies, right?
Exactly. It gives us a broader perspective, includes their assets and liabilities as well.
Makes sense. Okay, so we've got a good grasp of the financials, the merger, even that legal battle hanging over them. But there's one more crucial piece we need to look at. The auditor's review reports.
Ah, yes. The independent assessment. What are they saying?
Well, they've gone through everything with a fine-tooth comb, checked if it all adds up and makes sense. Both reports, standalone and consolidated, they're prepared according to Indian accounting standards.
It was good, right? Following the rules.
Yeah, that's what we'd expect. But there's a section about the ADFL merger, specifically about those restatements we talked about earlier.
Right, right. What are the auditors saying about that?
They're basically confirming that the previous period's figures have been adjusted to account for the merger. It's like rewinding the clock, showing how AWL would performed with ADFL from the start.
It's like a financial time machine. Gives us a clearer, more accurate picture of their growth.
Exactly. But I did notice something interesting in the consolidated report. It mentions 3D Future Technologies, obviously, but it says the auditors didn't actually personally review their interim financials.
Is that a concern?
I wasn't sure. Should we be worried?
Not necessarily. It's pretty standard practice, especially with subsidiaries. Their financials were reviewed by a different auditor, and Walker Chandiok, they relied on that report for their overall review.
Oh, okay. So it's like a system of checks and balances with each auditor doing their part.
Exactly. It's all about ensuring a thorough and comprehensive review.
Got it. Okay, so back to AWL's performance. We were talking about their segments and how products was the clear winner, bringing in that 23,388 lakhs in revenue for Q3 2024.
Right, their product portfolio seems to be their strength. They've got a good grasp on what the market needs.
Yeah, but then their services segment had a loss, 290 lakhs this quarter. If their products are doing so well, what could be going on there?
That's the question, isn't it? Lots of possibilities. Maybe their service offerings need a refresh, or their pricing isn't competitive. We'll need more information to really get to the bottom of it.
Definitely seems like a puzzle we need to solve. All right, what about the M&R division, the new addition?
Ah, yes. They were doing quite well, weren't they?
Yeah, they pulled in 429 lakhs in profit for Q3.
Looks like AWL's decision to branch out into maintenance and repair is paying off. Tapping into that ongoing customer need, it's a smart strategy.
Definitely. It's like building that steady revenue stream, right?
Right.
Okay, now let's switch gears and look at AWL's balance sheet. Their overall financial health, how are they doing?
All right, time for the snapshot. Their standalone figures show total assets of 67,351 lakhs and total liabilities of 17,988 lakhs. Gives us a basic idea of their financial standing.
And just to be sure everyone's following along, can you remind us what assets and liabilities mean in simple terms?
Of course, assets are everything the company owns. Think cash, inventory, equipment, even buildings. And liabilities are what they owe, like loans and bills.
Okay, so basically you got more things you own than things you owe. Makes sense.
Exactly. A healthy balance is key.
Now, what about capital employed? What's that all about?
Capital employed represents the total investment in their business. The money used to make money, essentially. For AWL, it's 49,363 lakhs for their standalone business.
So they need to make sure they're using that money wisely.
Absolutely. Efficiency is key.
Right. It's not just about having the money. It's about putting it to work effectively.
Exactly.
But we also need to factor in the consolidated figures, which include their subsidiary.
Of course. We
Yeah.
can't forget about them. Those numbers paint a broader picture.
So what do they look like with 3D future technologies in the mix?
All right, let's see. Their consolidated assets come to 67,462 lakhs, and their consolidated liabilities are 18,570 lakhs.
So a bit of an increase there.
Makes sense, considering we're adding another company into the equation.
True. True. Okay, but we can't forget about that looming legal battle with the BIS, right? That's got to be a major factor.
Oh, absolutely. It's a cloud of uncertainty, a potential financial hit that's hard to predict. The auditor reports actually acknowledge that, mentioning that no provision has been made for that compounding amount yet.
Which makes sense, right? It's impossible to estimate the impact until we know the outcome.
Exactly. It's a waiting game, and it adds a whole layer of complexity for anyone trying to figure out AWL's future.
Okay, so we've covered a lot of ground. We've got a good understanding of AWL's performance, their financial health, and even those external factors like the legal battle. What are your initial thoughts?
Well, what strikes me is the contrast. We see AWL showing strength in certain areas, like their product segment, and the M&R division seems to be a smart move.
Yeah, but then you've got the services segment struggling and that BIS case hanging over their heads.
Right, it highlights the importance of looking at the whole picture, not just the individual pieces.
Exactly. Now, there's one thing that's really caught my attention.
What's that?
AWL's subsidiary 3D Future Technologies. They're not a huge part of the financials yet, but their focus on 3D printing technology is fascinating.
Interesting. That could be a game changer, couldn't it?
I think so. It feels like a glimpse into the future of AWL.
3D printing has the potential to revolutionize the welding industry.
Exactly. More efficient, more customized.
And AWL is getting in on the ground floor. It's a smart move, especially while they're still so strong in traditional welding.
It's like they're playing both sides, hedging their bets.
It's a delicate balance, maintaining those core strengths while exploring these new avenues for growth.
Yeah, makes them even more interesting to follow.
Definitely. It's a story of tradition meeting innovation, with potential for both success and setbacks along the way.
All right, so we've broken down the financials, looked at the reports, and considered all these different factors. What's next in our deep dive into AWL?
Let's put it all together. Try to answer that big question. What does this all mean for their future?
Okay, so let's try to synthesize everything. What do you make of AWL's future?
Well, they're definitely at an interesting point, that's for sure. They've got some clear strengths, but there are some challenges they need to address.
Yeah, like a mixed bag.
Yeah, exactly. Adapting, innovating, and that legal situation, those will be key for them moving forward.
Let's break it down. What are those positives we talked about?
Well, their product segment, that's their bread and butter, right? Bringing in the majority of their revenue, they seem to have a strong hold on the welding products market.
They're meeting a variety of needs, for sure. And the M&R division, that also seems like a good strategic move.
It is. Creating that more predictable income stream, tapping into their customers' ongoing needs, that's smart business.
Especially in a market that's always changing.
Exactly. But of course, it's not all smooth sailing. The services segment, that loss raises some questions.
Yeah, what's going on there?
It makes you wonder about their competitiveness.
Yeah.
Are they keeping up with what customers want? Is it pricing? Outdated services? There's definitely some digging to do there.
A bit of a head scratcher. And then, of course, we can't forget about that BIS legal case.
Oh, right. That's a big one. That uncertainty, it can really weigh on a company.
A big financial penalty could be a real setback.
It could. AWL says the amount's unfair, but until there's a resolution, it's a wild card.
A wild card investors will be watching closely, I'm sure. But even with these challenges, there's something about AWL that feels kind of exciting, wouldn't you say?
Oh, absolutely. Their venture into 3D printing, that's intriguing.
3D Future Technologies, that subsidiary, it's like a sneak peek into what they could become.
3D printing could really shake things up in the welding industry. It's got so much potential.
Speed, customization, efficiency, it's like they're getting ready for the future while still holding on to their roots.
Yeah, they're not abandoning their core business, but they're also not afraid to explore these new technologies. It's a tough balancing act.
A lot of companies struggle with that, but it seems like AWL is doing a good job so far.
So far, so good. But it's not just about the tech. It's about the people, too, right?
You're right, the human element. Can they get the right people on board to make this 3D printing thing work?
Exactly. They'll need engineers, designers, technicians, people who are passionate about 3D printing.
And it's not just about hiring them, it's about creating a culture where those new ideas and skills can thrive.
It's a cultural shift as much as a technological one. They've got to integrate those new perspectives with their existing teams.
It's fascinating to think about. So we've gone through their financials, we've talked about the challenges and the opportunities. Here's the big question. Can AWL really bridge that gap? The traditional welding business and this leap into 3D printing?
That's the question, isn't it? It's what will define their success in the long run. Can they find that balance? Hold on to what works while embracing these new possibilities.
It's a story of evolution, of adapting to survive. And from what we've seen, AWL has what it takes. They've got the strengths, and they're acknowledging the challenges.
It's a fascinating journey to watch. Will they become a leader in the 3D printing revolution within the welding industry? Time will tell.
It's definitely a story we'll be following. All right, we've covered a lot of ground today. What have we learned about AWL? What should our listeners take away from this?
Well, Ador Welding Ltd is at a crossroads, that much is clear. Opportunities and obstacles ahead. But ultimately, their success depends on how well they adapt, how well they innovate, and how they navigate this changing world of welding.
The business world is rarely boring, that's for sure.
Never a dull moment. It's full of twists and turns, challenges and triumphs, and that's what makes it so exciting.
Well said. That's all the time we have for today. Thanks for joining us on this deep dive into Ador Welding Ltd. Until next time, keep learning, keep exploring, and may all your financial journeys be filled with insights and success. Okay, so we've spent some time with Ador Welding Ltd. now. Their financials, the merger, that legal battle, it's a lot. So what's the big takeaway here? What does this all mean for AWL going forward?
Well, it's clear that AWL is at a crossroads. They're showing some real strength in certain areas. But they've also got some hurdles to overcome. Their ability to adapt, innovate, and yeah, that BIS situation, those will be key to their long-term success.
Let's start with the good stuff. Their product segment, that's a powerhouse, bringing in most of the revenue. They seem to have a really good grasp on the welding products market, meeting all sorts of needs.
Yeah, their product portfolio is definitely working for them. And that acquisition of the M&R division, that seems like a smart move too.
Creating a more predictable revenue stream, tapping into those ongoing customer needs, it's a good strategy.
It is, especially in a market that's constantly changing. But it's not all sunshine and rainbows, right? The services segment, that loss, that raises some red flags.
Yeah, it does. It makes you wonder if they're keeping up with the times.
Exactly. Are they staying competitive? Are their services still relevant? Is it a pricing issue?
Yeah.
It definitely warrants further investigation.
A bit of a mystery to solve. And then there's that elephant in the room, that BIS legal case.
Oh yeah, that's a big one. A lot of uncertainty, a potential financial hit, that's hard to ignore.
And until there's a resolution, it's going to be on everyone's minds, I'm sure. Investors especially.
Absolutely. But even with all that, there's something about AWL that feels exciting. Would you say?
Yeah, I know what you mean. It's like they're not afraid to take risks. They're moving to 3D printing. That's a bold step.
It is. 3D Future Technologies, that subsidiary, it's a glimpse into what they could be. And 3D printing, I mean, that has the potential to revolutionize the whole welding industry.
Exactly. Speed, customization, efficiency. It's like they're preparing for the future while still holding on to their roots.
It's a balancing act for sure. Maintaining those core strengths, but also exploring those new technologies, those new possibilities.
A lot of companies struggle with that, but they seem to be doing it well, at least for now.
So far, so good.
Yeah.
But, it's not just about the technology. It's about the people, too, right?
The human element. Can they find the right people to make this 3D printing venture a success?
Exactly. The engineers, the designers, the technicians, those with the passion and the expertise in 3D printing, can they bring those people in and, foster that culture of innovation?
So it's as much a talent game as it is a technology game.
Absolutely. They need to build an environment where those new ideas can flourish, where they can integrate those new skills with their existing teams.
It's a fascinating challenge. We've talked about their financials, their strategies, those external factors. The big question is, can they really bridge that gap? Their traditional welding business and this leap into 3D printing.
Yeah, that's the question, isn't it? Can they balance those two worlds? That's what will determine their long-term success.
It's an evolution, an adaptation.
Mm.
And from what we've seen today, AWL has what it takes. They've got the strengths, and they're aware of the challenges.
It's a journey worth watching, that's for sure.
All right, well, we've covered a lot of ground today. What are the key takeaways for our listeners? What's the story of Ador Welding Ltd?
Well, Ador Welding Ltd. is at a crossroads. That much is clear. Opportunities and obstacles. But their future ultimately depends on their ability to adapt, to innovate, and to navigate this ever-changing landscape of the welding industry. It's a fascinating case study.
The business world is rarely dull, that's for sure. It's full of surprises and challenges, and that's what makes it so interesting.
Absolutely. It's a dynamic world, and AWL is right in the thick of it.
Well, that's all the time we have for today. Thanks for joining us on this deep dive into Ador Welding Ltd. Until next time, keep learning, keep exploring, and may all your financial journeys be filled with insights and success.